Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the special edition where our focus is on the Q4 earnings of RITES, the railway related company which has reported its Q4 numbers, where it has actually reported a muted set of earnings when it comes to the top line, bottom line and even the operational numbers as well. We've seen that the net profit marginally declined to 137 odd crores. The total income fell to 667 odd crore rupees in the Jan to March quarter from 705 odd crore rupees in the previous year's quarter as well. What we've also noticed is that expenses came in at 483 odd crore rupees. This is down from 514 odd crore rupees. The company has also declared a dividend of 5 rupees for the fiscal year FY24 as well. Operationally as well, on the EBITDA and the margins front as well, we have seen a slight decline. And to share with us what really went into this quarter and how does the outlook really look like, I'm now joined by the top management of the company. Mr. Rahul Mittal joins in. He is the chairman and the managing director of RITES. Warm welcome to you, sir. Thank you so much for taking the time out for this discussion on Business Today Television. At the outset, could you help us really understand why has this been a muted quarter as well as the entire fiscal year for you? Because this is the time when we are seeing that stock markets are rewarding railway related stocks like never before, and there is a lot of enthusiasm among the investors as well. But things start to create some doubt among the investors' minds when the earnings are actually not up a beat as well. So could you tell us if this is just something that we will be looking at passing off and things will start improving in FY25?
Good morning. Let's do a deep dive into the numbers. Let's see where the year started and where we ended. When the year started, we had two very major challenges in front of us. We didn't have an export order book. In fact, it was below 100 crores. We hadn't got an export order for last 4 years, COVID and post-COVID. The second was that quality assurance business, which is an important contributor to my consultancy revenue, which we were doing for Indian Railways as a high margin business. After about 4 decades, it was opened up through a competitive mode to 4 players, which had an impact both on the revenue as well as the margins. So we took these challenges, huge challenges head on at the beginning of the year. And there were 3 key elements to it. First, we had to get an export order. And by the end of this year, in the last few months, we've got 2 major orders, about 1,200 crores, 300 from Mozambique, 900 from Bangladesh. Second, we had to diversify into non-IR clients in my QA business. And so by the end of the year, we got some interesting non-IR orders. So from the beginning of the year, where it was about 2/3 as IR as the client, by the end of the year, it was 55% plus non-IR clients. And third, our core strength, which is project consultancy. So we capitalized on that. We had to capitalize on it to be able to minimize the impact of these 2 challenges. And by the end of the year, if you see year on year, my project consultancy has grown 10%. In fact, on a consolidated basis, the consultancy revenue is an all-time high of about 1,300 crores. So the direction is right. We are hugely encouraged by the trend, by the way sequentially we moved in the year. And I think with this platform, the coming FY will see us growing strongly on this pace that we've built.
Okay, understood, sir. So as far as your international consultancy segment is concerned, sir, you are seeing that there is a continuous improvement and it's all-time high levels for the revenues from this segment as well. Going forward in FY25, what will be the revenue contribution from this? What is the number you're pegging at?
Yes, in fact, the last year saw a total contribution from export of rolling stock of only 100 crores, which was an all-time low. So these 2 orders, which have recently come in the last few months of about 1,200 crores, aim is to see that we end up executing them as early as possible. So our expectation is that by Q3 or latest by Q4, these orders should start generating revenue. And export orders by nature, they are good top line, good margin order. So that's why we are confident that this trend, we should see an encouraging movement in this trend in the coming FY.
Right. So you have mentioned that, sir, you want to amp up your export business going forward from here as well. You're already at this 1200 odd crore rupee or a 1300 odd crore rupee order from these two places, Bangladesh and Mozambique you've talked about. What is the visibility that you have on the export orders beyond this as well? Is there already a visibility, and where do you see the export portion really to surge to in the long run, sir?
See, in our Rights Videsh strategic initiative, we have two elements to it. One is the export of rolling stock, and one is international project consultancy. In both these streams, we took a strategic decision early last year to start bidding aggressively across geographies, both in export and project consultancy. And that is what has given us results by the latter part of the FI and last few months. So, moving forward, whether it is export of rolling stock targeting countries in the Southeast Asia, Africa, Latin America, as well as project consultancy in the Middle East, South Africa, and the African countries, Southeast Asian countries, all these geographies, we see a good chance of us getting more orders, both in export of rolling stock as well as project consultancy.
Okay, got that. Now, sir, looking at all these segments that may start working for you in the latter half especially, could you give us any fresh guidance on what should we expect on the top line and the bottom line?
Yes, you see, as we said that 23-24 was a year of consolidation. We realized these two huge challenges at the beginning of the year, and we took them head on. And we wanted to hang on there, peg back the challenges, minimize the impact of these two huge challenges. And with the platform that we built, in fact, in Q3, we became a one order a day company. We maintained this trend in Q4. We got 100 plus orders totaling to 940 crores. So it was not a flash in the pan in Q3. We continued this trend of being a one order a day company, and this trend has continued in Q1 this year also. So we are confident that with this platform that we have built and, stem the tide of, taking on this challenge, we're quite confident that we see a healthy growth in the EBITDA and the bottom line in the coming FI.
Okay, understood. And sir, if you could also give us a guidance in terms of the margins, where do you see FY25 ending with?
You see, all my streams of revenue, whether it is export of rolling stock or project consultancy, we have 13 different verticals doing project consultancy across areas, metros, highways, buildings, etc., rail infra. All these over a period of the last few years have seen increased competition. And as a strategy to get these orders and bidding competitively, both domestic and globally, we've been trying to get more orders, bidding very aggressively. So moving forward, as you must have seen in the figures also, there is a dip in the EBITDA margins. And margins will be tough to maintain. But we are very clear, we are a bottom line driven company. Our bidding, our strategy, our execution is all focused on increase in the EBITDA and the PAT while trying to secure margins to the level that we have reached till now.
Okay, so since you're talking about both domestic and international orders, what kind of a pipeline can I expect in FY25? Are you already looking at L1 bidding at some places? Are you already L1 bidders, and where exactly are you going to be looking at as the pipeline shaping up?
You see, in export of rolling stock, the strategy that we started bidding for global tender, not limiting ourselves to only LOC funded tenders, and these two orders are both global competitive tenders. So our strategy is to keep on bidding. We bid for a number of places, and the way our experience with these two tenders, we are confident that whether it is the Southeast Asian geography, the African continent geography, we are definitely confident that in the coming quarters, we should be able to get some more orders in the export of rolling stock. Similarly, in the project consultancy wing, we have started bidding aggressively across sectors in these continents. In Southeast Asia, in fact, in Latin America also, we are doing a highway project in Guyana. So there is a movement both these streams to get more orders through a competitive mode globally. So we are confident that you will see some more orders coming under our strategic Rights Videsh initiative, both in export of rolling stock and project consultancy.
No, some bit more details is what I was looking at. When it comes to your order book currently, it's somewhere around to the tune of 6,500 odd crore rupees. Correct me if I'm wrong, sir.
So 31st March, our order book was 5,700 crores, and we haven't added the 900 crores Bangladesh order because that came in April. So
Okay.
5,700 crores out of that, the 2,600 is consultancy, 2,500 crores is turnkey, 300 crores is export of rolling stock, and balance is 300, leasing in our subsidiaries. And this
Okay.
trend has continued in this quarter itself. So what we can say with confidence that this order book trend is going to increase quarter on quarter. And what we are aiming is that by the end of the FY, our order book, our increase in order book should definitely be more than the revenue.
Okay, got that. And execution timeline, could you also share that, sir? As far as this entire order book is concerned, where are you at currently? How much will remain in FY25?
You see, we have a blend of orders. Even in consultancy, there are certain orders which have an execution timeline of 6 to 9 months. These could be some feasibility reports, and then there are project management consultancy orders, which go along as the infrastructure is built. If an airport is being built, taking 2.5 to 3 years, the project management consultancy order goes along with that. Similarly, the export orders normally take about 2 years for execution, 1.5 to 2 years. So on a blended basis, what we can say is this order book is about roughly about 2 years on a blended basis. And that's why our aim is that we keep building up on the order book and end the year with addition in order book more than the revenue in this FY.
Okay, got that, sir. Sir, in the end, there's also been some concern recently with the RBI coming out with the draft norms on project financing, on cost of borrowing for the project financiers. I just wanted to get a broader understanding. Is the industry and probably yourself have been facing any issues on that front, sir?
You see, as far as we are concerned, we are a debt-free company. Our business model is we are a low capex company. We are a consultancy company, and that's why we've been giving good dividends. Our dividend payout ratio was 95% plus last year. So as far as we are concerned, this cost of borrowing really doesn't affect us. But yes, any movement in the infrastructure space, since we deal with infrastructure consultancy across sectors, any positive movement in the overall infrastructure space would definitely indirectly benefit us. But let's see how it pans out.
Okay, wonderful, sir. So thank you so much for speaking to us on Business Today and sharing all these insights. I wish you all the best for the upcoming quarters too, and hoping for more interactions going forward as well on our channel.
Thank you.
Thank you, sir. And with that, viewers, we wrap up this very special conversation with RITES. You do see that probably the trajectory will improve in FY25. And of course, exports is where the company is really putting in a lot of focus going forward from here, and global expansion is on the cards as well. With that, we wrap up, but do stay tuned as we will continue to get you more earnings conversations on our channel.
To highlight some of the points which I've said, because of power tariff shortage or power tariff and power shortage, unscheduled power cuts, law and order situation, and जैसे dear lady exporter who spoke, the law and order problem coming out of